Ladies and gentlemen, federal employees, when you take money out of the TSP, how is that money taxed? How much money will you actually end up with after you pay Uncle Sam? That's what we're going to dive into today. And welcome if this is the first time to the channel. My name is Dallin Hawes. I'm a financial planner who serves federal employees every single day, and I absolutely love it. So let's dive right in. So let's just clarify a couple things. The TSP has two different sides. There's the Roth TSP, okay, as you see here, Roth, and traditional TSP. There's two sides of the same bucket. If you have money in the Roth, that money can come out completely tax-free, okay? Zero taxes owed, assuming they're qualified withdrawals. You can take money out of the Roth side completely tax-free. But what we're really talking about today is what happens when you take money from the traditional side. Because most of you have most of your money in the traditional TSP. If you don't know which one you have, I'm sure you have the traditional TSP. That's going to be the default one, okay? So taking from the traditional TSP, you do owe taxes. At the very least, you're going to owe federal taxes. Regardless of where you live in the country or in the world, when you take money out of the TSP, you are going to owe federal income taxes. Now, you may also owe state income taxes if your state that you live in has taxes on TSP withdrawals. Not all states do. Most actually don't, but there's many that do, so that depends on your state. For example, Virginia does tax your withdrawals from TSP. Okay, so if you're in a state that has state income taxes, you got to pay state income taxes and federal income taxes. But again, regardless of where you live, you have to pay federal, and that's going to be the bigger of the two. Okay, now what percentage do you pay in taxes? That's the big question. So just so we're clear, the vast majority of types of withdrawals from the TSP, they're going to withhold a automatic 20% withholding. For example, if you say, hey, TSP, send me $10,000, they're going to take $2,000 and send that to the IRS, and they're going to send you only $8,000 after taxes, okay? This is going to be their default. They automatically withhold 20% for federal taxes, and send it straight to the IRS. However, that does not mean you're actually going to owe 20% on federal taxes. That's not what it means. It just means that's what they withhold. For example, if you're still working, you know that you withhold federal taxes out of your pay right now. And that may not be the perfect amount to withhold, right? If you file your tax return next year, they're either going to give you a refund because you paid too much, or they're going to say, hey, you owe because you didn't pay enough. The same is true here. This is just their default. If you are in a tax bracket higher than that, then you're going to owe, right? If this wasn't enough. If you're in a tax bracket lower than this, then they'll give you money back at the end, okay? And you can always raise this withholding. If you want to increase it, you can tell them to do more. However, you can't always decrease it. Depending on what type of withdrawals you're taking, you can't always decrease it, okay? So again, their default, though, is 20%. That doesn't mean you're going to owe exactly 20. It's just their default withholding. And this 20% doesn't have to do with anything on the state side. That is just for federal. If you want them to withhold state as well, you have to ask them to do that. They will not do that automatically. Okay? So, as a recap, if you pull from Roth, that is non-taxable. What we're talking about here is only on the traditional side. You have to pay federal taxes regardless of where you live. You may have to pay state as well if your state does tax TSP withdrawals. And the default withholding for the federal side is 20%. But again, that doesn't mean that's what you're going to owe. You may want to increase that if you're in a higher tax bracket. That's just their default withholding. They're automatically going to send over. So if you ask for $10,000, again, they're going to send 20%, in this case, $2,000, straight to the IRS, okay? Now, taking money from TSP is a taxable event, meaning it counts as taxable income, which means it can affect your tax bracket, okay? As you might know already, let's say this is your income, where these are the different tax brackets. The more income you have, the higher the tax bracket you're in. Let's say this is the 24% up here. This is the 22. This is the 12. Whatever. I'm just making these up, right? The higher your income goes up, the higher percentage of it you have to actually pay in taxes. So taking a large TSP withdrawal may spike you up into a higher tax bracket. So you want to be careful and watch your tax bracket as well. And if you didn't know, once you get within Medicare range, Medicare age, which starts at 65, your premiums for Medicare depend on your income. The higher your income, the higher the amount you pay for Medicare Part B premiums. So again, taking money from TSP will not only impact your tax bracket, your percentage that you pay on additional dollars, and potentially what you pay for Medicare. So you want to be careful when you take withdrawals. It's going to impact stuff. You want to make sure that all those impacts you're okay with, okay? So that is how taxes work on TSP withdrawals. If you have any other questions, there's a link below. You can actually submit questions to us, and we answer them every single week. We answer questions from you guys. I hope that is helpful, and I'll see you guys in the next video.